Hi guys, I'm Phil Town from Rule 1 Investing. Today I want to talk to you about a question I hear a whole bunch right now for good reasons. Is gold a good investment right now? Okay, well right now, Mr. Market, that famous character who puts the price on stocks, is crazy, manic, irrationally exuberant. Today we're facing more uncertainty than I've seen in the stock market in many, many years, and it could continue to go up even though the yield on the S&P 500 is 2.5% right now. That's like buying Vancouver real estate. This is nuts, okay? The stimulus checks are coming. Bailouts for major industries are coming. I think the Democrats are going to send $2,000 to everybody. People are worried about inflation. We just printed 35% of all the dollars ever printed in history. And what the impact is that's going to be on buying power. And maybe you better buy a Mercedes right away because there'll be 200,000 real soon. During these kinds of situations, you guys, people start to look for an alternate currency, like gold, for example. Gold isn't an investment per se. It isn't an investment per se. So we'll talk about the pros and cons of this thing. It's not an investment per se because it doesn't produce cash flow, and that makes it something that is just priced without our ability to figure out its value. It's just price in the market. A Picasso is 40 million, or maybe it's 10 million. Or maybe you can buy it for $400 at a flea market, right? Who knows? It's the price that somebody puts on it and somebody's willing to pay. That's not the case with investments. Investments, like you own a piece of real estate, you bought it with a 10% yield on the rental income, and you know you're going to get money on this thing, and you can value that piece of real estate based on that and a long-term view of how good a market it's in. So gold is, in my view, a currency of sorts and really a hedge against the further devaluation of the dollar. And you need to understand that thinking. From 1800 to 1935, the value of $1 was that it bought the same dollar amount of stuff as the $1,800 did. Okay, so if the $1,800 bought, a big, huge sack of rice, the $1935 also bought a big, huge sack of rice. And then the U.S. Federal Reserve started devaluing currency. We devalued currency massively, and that massive devaluation of currency has caused the buying power of that $1,800 or that $1935 today to go down to a nickel. So we do have extreme currency risk going on. Now, it's a strange kind of risk. What it really means is not so much that you can't buy bread in the United States with your salary. The dollar is going to be buying dollars worth of stuff in the United States, and of course it inflates, but you get paid more. What it means is you're going to have trouble buying that Mercedes. So we're going to talk about gold here for a second. Gold comes in some forms, right? There's the gold bullion. You take physical ownership of it. There's gold futures, where you are basically betting on the ups and downs of the gold price. And then there's exchange traded funds that actually purchase gold. The one that I've bought into is GLD, and it owns gold, and that gold is stored in London. And it's a trust through U.S. Bank. And you probably maybe could get your hands on the gold if you own the ETF and everything came to a screeching halt. But likely that ETF will hold its value as long as there's a stock market. So it's not perfect like holding the gold, but it's pretty solid. In the United States, we need to understand the impact of gold over time. We had a currency. The reason the dollar was solid for all that time was the currency was based on the dollar. And you could convert $20 into an ounce of gold for that entire 135 years. And then we changed it. And ultimately in 1971, we got off the gold standard completely. And ever since then, it's been straight down. And in between 1934, I think, and 1971, FDR, federal, what is his name? Franklin Delano Roosevelt, did an executive order just on his own with his pen and confiscated all the gold in the United States. All the gold bullion, all the gold coins, certificates, all of that, all got confiscated. And that was the end of it. And then he revalued it and basically devalued the dollar by 50%. So let's talk about maybe an advantage of buying gold. Over the last 200 years, it has increased in value slightly ahead of the dollar in 1800. So it's worth about $3 and $1,800 today after 200 years. So it hangs in there pretty good with inflation. So its real return is really positive, and you're going to, like, if you hold it for a long period of time, you're going to be able to buy more with it in the future than you can today, but just a little bit more. So long-term returns are not great. By comparison, bonds, just government bonds, would give you $1,600 and $1,800 after 200 years. And the stock market would give you $1 million and $1,800 after 200 years. So that's, obviously we want to keep most of our money there, but we might want a little hedge here. There's no periodic cash flows to the investor. Warren Buffett said, I wouldn't want gold per se because, what are you going to do with it? You can go up and kiss it. It's a cube, 90 feet on a side. You can go kiss it, but that's it. He said, I'd much rather have what you could buy with all that gold, all the gold in the world. It would buy all the agricultural land in the United States, the breadbasket of the world, and about 18 Exxons, right? And I don't know how many apples you could buy, but it'd be a lot of apples. Apple computer. So what did you think about investing in gold? Obviously, 1,000,000 to 1 is better than 3 to 1. So in the long run, we want stocks. But occasionally, we should perhaps have some of our portfolio in something that can offset the devaluation of the dollar. And given that the dollar got devaluated by 12% in 2020 against the euro and is continuing to go down as we continue to print it, and we should expect a lot of printing over the next year as we continue to go through this COVID crisis, I think, there's a place for gold in your portfolio. So what do you think? Should you invest in it? Should you stick to stocks? Should you do both? Should your answer change based on the status of the market? I'd love to know what you guys think about this. It's a real interesting question. I mean, investors as good as Ray Dalio are suggesting 10% in gold. So now I'd love to hear from you guys. Are you considering it? And if so, why? I'd love to hear why you think it's a good idea. Leave a comment below with your answer. I'll be following up with you, and thanks for watching. Now go play. Guys, if you enjoyed this video and you think it was valuable for teaching you more about investing in gold or not, hit the like button and share the video with your friends. And if you want more investing content, just subscribe to my channel. And don't forget, we got a nice free gift for you there. So just click the button. And thanks again for watching.